Hello, this is David with Survive in Place, and I've got a couple of pieces of economic news I want to share with you today that are causing a lot of people to focus more on their urban survival plans than they have in the past. The first thing I want to talk about has to do with mortgages, and what we've got here is a chart from Credit Suisse, and we're looking at mymoneyblog.com. And what it shows is a chart of how many ARM and teaser mortgages are resetting each month. And what we can see here is this green area here is a wave of subprime mortgages that matured in 2008 and early 2009, and we heard a lot about that and the effects of it on the economy. And then we've got this little uh, respite here, this little down period in the summer of 2009. But then from there, we see wave after wave after wave of adjustable rate mortgages maturing. And as you can see, it's 25 billion, 30 billion, 40 billion dollars a month of these mortgages that are resetting. And what that means is we've got a long time before we're going to see the end of the real estate troubles that we've got, and we're looking at around 2012. Looking at the subprime mortgages during the time when those were coming due, we all know from watching the news that foreclosure rates went up, but during this time, the federal government had an $8,000 first time home buyer credit, and it expires December 1st, 2009, and we're not going to have the benefit of it when we're going through these resets. So it'll be very interesting to see what happens. The next thing that I want to show you is the S&P 500. And basically what this is a chart of the PE ratio of the S&P 500, and that's simply the price to earnings ratio. And what that is if you go out and you buy the S&P 500 for, let's just say, $120, you're going to get $1 of earnings per year for that $120. Now, historical average is about 20. So what we need to see in order for things to come back into the normal range is either an 80% drop in the price of the S&P 500 stocks or earnings going up 6 times. And I don't see earnings going up 6 times, and with the number of baby boomers and retirees moving money into more conservative investments, I don't see prices going up 6 times, or I don't see prices being sustainable. So we're likely to have some big drops there. So what can you do? Well, the country obviously has got some big troubles coming, but you don't have to. There's things that you can do to prepare. You can't really change what's going to happen, but you can change how it affects you. First of all, don't worry about it because worrying's not going to do a darn thing. Second thing is try and pay down as much debt as you can, especially consumer debt. Then, when you have a choice to buy tangible goods or beanie babies, buy tangible goods. Buy something that's going to have some value to people down the road. If you buy things that are going to last. And also want to encourage you to consider alternatives to the stock market. Silver, buying more food and consumables to have around the house in case of hard times. Possibly even gold, or if you're a shooter, guns and ammo. And finally, I want to encourage you to go over to surviveinplace.com and take a look at the course description. It's a 12-week online course. It's delivered in your email box, and it goes through basically everything that you need to do to get your family ready to survive a terrorist attack, a natural disaster, a flu pandemic, or economic hard times while living in your own home. It doesn't require a retreat. It doesn't require a fortress. It's a very practical, non-alarmist system for getting you and your family ready for hard times that look like they're coming. So go on over and check it out, and remember it's got a 100% money back guarantee. So if you don't like it for any reason at any time, you can get your money back. Thank you very much, and I will talk to you soon.